Hello and welcome to KYC, a brand new show at NDTV Profit. And in this fast-paced world of stock market, investors are bombarded with information, but what they often lack is deep, comprehensive understanding of the companies and they invest in. Know Your Company is a show designed to give you regular investors some powerful, actionable insights into fundamentals of a single NSE-listed company every day. And today we are going to talk about Ajmera Realty. Now, this particular real estate company has done very well through the course of the last 1 year. It does provide residential and rented commercial properties as well as part of its profile. And besides that, it is focused on premium developments in the luxury and the mid-luxury space. Well, for anyone who lives in Mumbai, they are aware of this particular brand in realty, that's Ajmera Realty. Besides that, they also operate in Ahmedabad, Bengaluru, and as well they have an international project going on in Bahrain too. Now, this is as far as what the company is doing at the moment. The portfolio has seen about 20 million square feet of projects being completed. Besides that, about 1.1 million square feet of projects which are ongoing at the moment. And we do have about another 1.7 million square feet where the potential launches on the cards, along with the fact that about 11.1 million square feet is what entails in future development potential. Now, we're going to talk about all these factors a little bit later on as far as the management is concerned. But that said, let's also take a look at how the company has done so far. And as usual, what we try to do is essentially rate all these companies on the key areas that would include something like your income statement. But in this case, of course, we're working off the key operational metrics as well, since the real estate sector has a lot in terms of your pre-sales too. But we'll talk about the balance sheet as long as cash flows, along with your return ratios too, shareholding pattern, along with street credentials and dividend payouts. But let's get in my colleague Anushi, who will also help us elucidate further as to how this particular company has done so far. So Anushi, thanks for joining in. Let's start off with the key operational metrics, because that perhaps is the most important one in terms of judging a real estate company.
Absolutely, Agam. So for the key operational metrics, before we talk about the income statement and balance sheet and all that for a real estate company, what is the most important factor to consider is its pre-sales, the collections number, as that would be the indicator forward with what kind of revenues and how the company is doing financially. So if you look at the sales value for the company, we've seen a decent amount of growth between FY23-24 and H1 of this year. 842 CR was what was the sales pre-sales figure, that's the sales value, which has increased to 1,000 crore in FY24. If you look at H1 FY25 performance, they've clocked in about 18% of growth for the year. Very important to focus on the Q3 and Q4 trajectory of the company, as that is when the real estate sector in general is expected to be stronger. Collections, if we see, collections also have remained in FY23 and 24, have remained in a similar range, 532 crore, 570 CR. And in H1 FY25, we are almost looking at a 300 crore shy of mark in terms of your collections is concerned. In fact, in H1 FY25, we've seen about a 34% of growth in terms of collection number where that is concerned. Sales volume, now, if you take the whole real estate industry in general, one common thing that we have seen in the first half of this year is that the sales volume number have seen a downtick. What was 2.44 lakh square feet in H1 FY25, this is the amount of land, amount of volume that they've sold. It's seen about a 4% of a downtick. So again, the emphasis is on the future commentary of the company. We will be connecting with the management. So sales volume is definitely one indicator that we should be looking forward to. But as per the operational metrics, this is how the picture is building.
Right. So some very important metrics coming in focus. But let's talk about how this has already translated into your top line and your bottom line for Ajmera Realty so far. So if you consider the first half of this, financial year, you'll see that there's a 51% growth in terms of your top line and another 55% growth as far as your bottom line is concerned. Again, your EBITDA margins remain very healthy, well over 30%, 33% to be precise for first half of FY25. But moving on, if you consider the balance sheet, let's see how that's panned out too. So when it comes to the balance sheet, currently its net worth stands at around 865 odd crores. Its long-term debt and short-term debt taken together is a little over about 800 odd crores. So, that said, in terms of its cash in bank, that stands at around 116 crores. So its debt to equity, its net debt to equity is well below the mark of 1. And from what I understand, that the management has suggested that they want to keep it at around 0.8, and it's roundabout there. But that's as far as the balance sheet is concerned. So overall, in terms of the third parameter too, we'll give it a thumbs up on the back of good operational metrics, a pretty steady growth as far as its top line, bottom line is concerned, along with operational performance, as well as its balance sheet, which looks good. Anushi, what about the cash flows here?
Right, Agam. So if you look at the cash flow from operations in the first half of this financial year, that stood at roughly around 148 CR. 148 CR was what was in FY24, which now we are looking at a 74 crore of figure for the first half of this financial year. And net cash flows, we are seeing a negative number at 46 CR as compared to around 77 crore as of FY24 end. But I also want to talk about what the company in its presentation have stated. Now, if you look at the cash flow potential of the ongoing projects, upcoming projects and other avenues, they estimate around 2,300 crore of cash flows. This is over the life cycle of various projects that they're taking place. So very important to take that into consideration as well. The timeline as to when these cash flows we will start seeing in the financial statement is something that we should be watching out for. Cash flows from other avenues is also estimated to be around 330 crore or something. So very important to focus on that part of cash flows, Agam. So yeah, that is all the cash flow picture that we are building on.
Right, fair enough. So, based on cash flows, we've addressed three very important financial statements. That is, of course, the revenue, the balance sheet, as well as the cash flow statement. So let's come to the return ratios. Now, I must admit that the return ratios have improved for FY24 over FY23, but they've still been lacking. So firstly, when it comes to return on equity, that return ratio stands at around 11.5, an improvement over 10.5 in FY23. And return on assets, again, are higher at around 5.5% versus 4.6%. So they've certainly been seen an improvement, but they're well away from the ideal return ratio of around 20-25%, which is why we'll give this a thumbs down. And finally, coming down to shareholding as well, we're going to give this a neutral rating because firstly, among the positives is that it has a reasonably high promoter holding of 68%, well over 2/3. Its institution holding is not considerably high, which means that the balance is with the public, and that so which is why that's something, because the relative lack of institutional holding is the reason why we'll give this company a neutral stance as far as its shareholding pattern is concerned. But coming down to its price movement as well as dividend payout, Anushi, how are these two aspects looking?
It's been a strong year for Ajmera Realty. If you talk about the stock price movement, in last 6 months, we've seen about a 52% of growth. 1 year, 131%. So quite a strong investor return in terms of what they've done over here. In fact, over the 5 years also, the stock has almost seen about a 8x gain. So very strong in terms of performance is concerned. Coming to the dividend payout, we'll give this a neutral rating. Around 12.5% is what this is as of FY24 number that we are looking at in terms of the dividend payout. So yeah, this was the overall outlook in terms of what the street performance was as well as the dividend payout.
All right, so there you have it, and that gives you an overall rating of how the company is. Of course, very quickly, let's look the revenue. So we have about 51% revenue growth, as I was suggesting, and we're about 33% EBITDA margins coming in with the profitability also moving up by around 55%, which explains the kind of growth that you've seen for the company for this calendar year gone by. So where does that bring us in terms of your total rating for the company? So it's certainly a big positive for key operational metrics. Income statement growth looks good. Balance sheet checks out well, along with its cash flows as well. And in terms of your return ratios, that seems to be lacking. Shareholding, again, it's a neutral rating, but as far as the street credentials are concerned, with the kind of movement the stock has seen, is certainly going to be an up. And dividend payout ratio, has, well, again, been not amazing, but you must realize that this is a growth company, which is why it would ideally want to use a lot of its funds towards, well, capital expenditure. And still, it has a dividend payout ratio of around 12.5%, which is not bad for a real estate company, which is why we've given it a neutral rating. And that brings our total rating for the company at around 6 out of 8. So it certainly made a distinction as far as the overall rating is concerned. But, let's talk about the outlook with the management themselves. So, Anushi, stay with me. We have with us Dhaval Ajmera. He's a director at Ajmera Realty and Infra, who joins us on the show right now. Dhaval, good morning, and thanks for taking the time out. Well, as you know, among the many discussion pointers that we've already come through on Ajmera Realty, well, among the first factors that I'd want to ask you about was whether or not your guidance for FY25 is on track. We just have one more quarter left. Of course, we will have the third quarter earnings announced a little later on in the next few weeks as well. And if you could also tell us about your key launches in the next couple of quarters, which could potentially come and start contributing down the line.
So thank you very much for inviting, and very impressed with the detailed presentation and the things which you've done for the company. All I would like to say is the company is going on track with the pre-sales guidance. We have achieved a lot what we had targeted in terms of our pre-sales quarter on quarter, and we continue to do so even in the coming 2 quarters as well. As far as the launches are concerned, yes, there are a few launches which we have been working on. There has been a few approval issues which have come because of the Supreme Court NGT order, where the approvals are getting a little bit delayed. But however, maybe we are still very hopeful that we still have 3 more months to go, and we should get the requisite approvals for it to get launched. But having said that, we are not moving beyond. We are not shying away from the pre-sales guidelines. But yes, we are just a little bit jittery on the launches because of the Supreme Court things. If that comes in, then we'll probably have all the launches also coming in place.
Right, Mr. Ajmera. So lack of approvals is a factor that we've seen across the real estate industry in the first half of this year. Just want to ask you more about this. Is this a situation where we've seen this concerns receding as we step forward in the third quarter as well? What could this mean in terms of the pre-sales growth? Are you in line with what has been stated in FY25 guidance, and not just FY25, even if you look at for FY26 guidance, what is the picture ahead for the business in terms of where the pre-sales is concerned and the launches expected?
Look, I'm just, what I personally feel is that this is like a temporary glitch which is coming, and we are hoping Supreme Court will take, cognizance of this, and which is where a lot of approvals which are stuck within, not only in Mumbai per se, but all across India, which will come into place. But, as far as our pre-sales, the guidance is concerned, it will definitely be matching. We are very much on that as a target. Our only concern is that a few project launches which we were supposed to happen in these 2 quarters, which we are still very hopeful that if things come in order, where we are expecting Supreme Court to give some judgments within January. If that goes through, probably we will have a few more launches also coming in line. But as far as a longer picture is concerned, it's nothing to worry. We are absolutely on track with all the approvals, with all the guidance. It is a few glitches which is on, and I'm very sure that this will be also through in the next month or so.
Well, the number that we have with us is about the 6,000 crores worth of revenue potential on ongoing and potential launches down the line. And, well, if you could give us an idea about what this period could look like. And I'm sure that a lot of this is subject to approvals as well as the execution of these various projects. But if you could give us a timeline, rough timeline on perhaps, recognizing these revenues.
So, all these projects, what we have announced of 6,000 crores, which is existing, current launches and the new launches, the timeline for all this will flow. The entire 6,000 crores revenue will be under balance sheet in the next 3 to 4 years time. So you see, every project of ours is earmarked in a way that we finish the project in 2, 3, or maximum 4 years. So that's how this entire 6,000 crores will pan out in the next 3 to 4 years time.
3 to 4 years is what we are looking in terms of the sales number that you've mentioned. I also want to address on the cash flows. Now, cash flows, if you look at FY24 and H1, you've given a very optimistic commentary on as far as where the cash flows would be concerned. This is including the new launches of some of the projects that you anticipate going forward. This is roughly around the size of 2,000 crore. Can you give us more details on that as well as to when we will see this positive numbers coming back into the picture in terms of where the cash flows are headed in future?
So, our cash flows are mapped and married to every project. And what we really see is that whenever we launch a project, there is a certain amount of investments what we do from our mother company, whereas the other things are being managed by the sales and probably the debt or the working capital requirements. So, and what we are also saying is this 6,000 crores is only of the projects which we have plan to launch in this financial year, or probably at most at the first quarter of the next financial year. And beyond this also, there are other projects worth about 10 to 11 million square feet which will come into picture over the next 2 years or 1 year or 2 years time, which will also invent and give us the cash flows which are required for the company. So overall, the company has a very healthy cash flow which is coming through from the sales, and our returns in terms of our sales performances are concerned, or the cash flows are concerned, have been significantly very positive, because we have seen good amount of sales coming, which is managing the project by itself, and we are less dependent on debt. In fact, right now also, when we had the preferential allotment, we have in fact paid away 100 crores of our debt, and we are reducing our debt size. So the company is moving towards a positive cash flow, and we continue to see this in the coming financial years as well.
Dhaval, we're looking at a very good period for the entire real estate sector. The last 2 to 3 years, the entire sector has gone up, and it's come out of a very long period of maybe 10 to 15 years where conditions weren't exactly the best. My question then is, how does FY26 look as compared to FY24, FY25? Do you think there could be challenges? Also, if you could give me an idea in terms of saturation in the market when it comes to buying property.
Look, my overall thing is that the real estate market or the Indian economy is moving on a very positive direction, in spite of all the external segments. Like if I have to look at the wars which are happening all across, but still Indian economy has been very resilient. And post-COVID, we have very clearly seen that the asset investment, whether it is gold, whether it is stocks, whether it is equity, or whether it is real estate, probably real estate preference has come up post-COVID. And that is where we are seeing a lot of inflow or demand of real estate coming in from people at large. And what I see is that this will continue to grow over the next 5 to 7 years for sure. And I really don't see saturation happening unless the prices significantly start increasing, in which I have seen post-COVID, when the market has been good, developers have not dramatically increased prices, but they have marginally increased prices over the time. And that is why there has been a good shift of demand versus supply, and we have seen good numbers coming all across from the entire industry. And what I also see this to be continued over the next 3 to 4 years time. And overall, there has been a good demand. We have seen in our projects, whenever we've launched, we've done 50%, 70%, or 60%, sales during the launch phases itself. So that shows the overall economy being good. And as far as our company is concerned, I'm very sure that, with the kind of launch pipelines what we have in the projects what we continue to grow, we are looking at 25 to 30% growth year on year.
Well, in the near term, over the next 1 year, would it be safe to say that rental yields will move considerably higher as compared to, well, say, for buying a residence or for that matter, commercial properties concerned?
So definitely commercial has been in a great demand in the entire Indian market, Indian commercial market. And what we see is, the best yields in terms of, commercial assets, or the real estate asset has been commercial. And which I foresee this will continue over the next 5, 7 years for sure. even in Mumbai, if I have to particular a micro market of Mumbai, if I have to say, because of the redevelopments which are happening all across, I think the rental yields for residential has also been significantly better as compared to past 2 years' time. So yes, this will continue, and now with the the long-term capital gain being almost equal for every asset class, I think real estate has become a preferential investment asset class for people to invest and get a better rental yield. So overall, I think it's been a positive move, and we see this continuing over the next 5-7 years for sure.
Well, Mr. Ajmera, while there have been talks about the demand growth sustaining for the next 3 to 4 years, as you've pointed out, there have been concerns of the kind of pricing growth that has taken place after the COVID period in these 2-3 years especially. That there are expectations of pricing growth now stagnating to a particular level. A single-digit growth is what is expected. Taking your company into consideration, what does it mean for a real estate company when the pricing growth is is increasing in a very rapid manner and then it starts to stabilize at a certain level? Some of the key markets also, if you can give us a picture on that, which includes Mumbai, Bangalore and more.
So, as I have always said that if you look at even our company, we have, grown our prices, but at a steady rate and not made it 30% or 40% growth year on year. So far as every real estate developer in the market, if the pricing has been, growing in comparison to the inflation yield or probably at a 6, 7, 8% incremental year on year, I don't think there will be a stagnancy coming in. The demand will also continue to grow accordingly because people are personally also growing in that fashion. So I don't see that unless and until the jump is 20-30% year on year, there will be a problem in the pricing. The company can get better volumes. That what we've seen, that we've grown from a 300 crore to 1,000 crore over the last 3 years, and that is only been doing better volumes and not by increasing pricing. So so far as if this continues to grow, and I feel majority of the real estate developers are moving in this direction, and this will help the market also grow, expand in a better way.
Okay, Dhaval, we leave it at that. Thank you so much for shedding so much light as well as giving us a lot more insight into not only your business, but the real estate sector as a whole. Well, we thank you once again for your time.
Thank you, and wishing everyone a very happy New Year.
You too. Happy New Year to you as well. Well, but on that note, we are at the end of this edition of KYC, but lots more lined up on the other side. Stay tuned to NDTV Profit.